The Magnificent Seven is breaking apart right before our eyes, and if you don't understand what's happening, you could be left holding the bag while the smart money moves on to the next big thing. So today, let's talk about what's happening with these dominant tech giants, see which ones are winning and which ones are falling behind, and most importantly, find the next opportunities that are going to help investors build their wealth. I'm Matt Weinschenk at Stansberry Research, and I've been in this business for nearly 2 decades, and I've seen this movie before. One story was driving the market, and now that story is changing. But here's what many investors miss. The split happening right now is not random, and it's telling us exactly where the next wave of wealth is heading. So stick with me for a few minutes, and I'll break down the 3 clear winners, the 2 surprising losers, and the next wave coming up behind the Magnificent Seven as AI takes hold of the market. So first, let's talk about how we got here. Before we had the Magnificent Seven, we had FANG, Facebook, Amazon, Netflix, and Google. Then Apple caught fire, and FANG became FANG with 2 A's. Microsoft's cloud business exploded, so we started calling it FANG-M. And then Facebook became Meta, Google became Alphabet. Someone tried calling that Mama with 2 A's at the end, but thankfully that didn't take hold. Then Tesla and Nvidia joined the party, and gone was any catchy acronym. And we ended up with the 7 tech titans that an analyst at Bank of America cleverly dubbed the Magnificent Seven. That name came from the classic Western. Great movie, by the way. And of course, I'm talking about the 1960 original, not the 2016 remake. But here's the crazy part about the Magnificent Seven. Since the pandemic bottom, these 7 stocks didn't just beat the S&P 500, they crushed it by nearly 4 times over. And these weren't similar businesses riding the same trend, right? This wasn't like all the semiconductor stocks rising together. These were all different, right? They all used technology, but the businesses behind them were not the same, right? Meta runs social networks, Alphabet dominates search, Apple makes phones, Nvidia creates chips, Tesla builds cars, Microsoft sells business software, and Amazon kind of does everything. But dig deeper and you start to see the similarities, and that tells you a lot about the economy and the market. So one thing, a few of these companies all had massive audiences. That's what they had in common. Meta and Alphabet show ads to billions of people, and Amazon kind of became the search engine for shopping. So these companies were funneling those eyeballs everywhere. They became huge platforms connecting these giant user bases with businesses and making huge profits because of it. So that showed us that attention was growing ever more important in the business world. Now, 3 of them, Amazon, Microsoft, and Alphabet, they built cloud computing empires. So the profits from those cloud businesses, that's been the rocket fuel for their stock prices. And the infrastructure they built presaged the AI boom. And altogether, all these companies had in common incredible scale. The biggest kept getting bigger. The projects they undertook were huge, and it took lots of capital. And it made it look like smaller companies couldn't compete as well any longer, and that our tech markets were headed towards a situation where the big winners took all. But there was something else happening that made these stocks almost unstoppable. They got so big that they became such a huge chunk of the market that any investor wanting to match the S&P 500 simply had to own them. No choice. And even more so, every day, millions of dollars pour into index funds through 401ks and other passive investors. And where does that money go? Well, since most indexes were market cap weighted, the most money went into the biggest stocks, the Magnificent Seven. So there was an upward spiral here. More money flowed in, pushing prices higher, which made them a bigger part of the index, which attracted even more money. So it was a self-reinforcing cycle that seemed impossible to break. And at one time, you could almost argue that these stocks couldn't go down because they were hoovering up so much capital. But now, the Magnificent Seven is splitting up, and the deciding factor is crystal clear, and that's how close each of these companies sit to artificial intelligence. Nvidia and Microsoft and Meta are leading the pack this year. Now, Nvidia makes the GPUs that power AI. They're the central gear in the AI machine. Microsoft owns the cloud infrastructure that OpenAI and others use to train their models. And Meta, they started out strong with their Llama model, fell behind a bit, but now they're on a hiring spree, throwing billions at every talented AI engineer in Silicon Valley trying to play catch up. Now, Apple and Tesla are the ones that are down big this year. Apple completely whiffed on AI. Their AI rollout has been disappointing. There's no other way to say it. And Tesla, obviously they have a car business, but Elon Musk built XAI as a separate company instead of integrating it with Tesla. So that's a missed opportunity for shareholders. And then Alphabet and Amazon are somewhere in between. They do have AI plays, but they're not dominating the narrative right now. And their performance shows that. So you may have thought a few months ago that the Magnificent Seven and the AI trade had gotten overheated, but instead of cooling down, AI has actually pushed some of the Magnificent Seven even higher. So if AI is in a bubble, it is not popping yet. But here's a lesson that history keeps teaching us. Market leadership doesn't last forever. If you look back at any decade, you'll see the names that dominated and then faded. Right? The 1980s, it was IBM and AT&T. 1990s, that was mostly Japanese firms. 2000, the biggest companies were Microsoft, General Electric, and Walmart. By 2010, you had Exxon in the top spot and PetroChina, and then Apple showed up. But in every single decade, you would look at those giant companies and you would think, well, these will be the biggest companies forever. And it's been wrong every time. The leaders today won't be the leaders tomorrow. That's not pessimism. That's just market reality. So where does this leave you as an investor? Look, if you own an S&P 500 index fund, you already own a lot of these Magnificent Seven names. And let me tell you, they are expensive. The Magnificent Seven trades at about 33 times earnings. The S&P 500's only at 24. And if you take the Magnificent Seven out of the S&P 500, the remaining 493 companies trade at just 21 times earnings. So that's more reasonable. It's not cheap, but it's reasonable. And there are deals out there, right? Healthcare stocks, 17 times earning. International stocks, 15 times earnings. So here's my take. If the AI story is real, today's leaders will build the foundation, but then AI will spread through the entire economy, making all kinds of companies more efficient and profitable. So yes, you should bet on AI. But with the gambling mentality in the markets today and the recency bias I see from investors who have only learned from the last few years, I worry that too many people own nothing but the Magnificent Seven. So the only constant in markets is change, and that goes for the market leaders too. Don't forget there are opportunities everywhere. If you know where to look, the next magnificent companies might not even be on your radar yet. So to dig deeper into how to study and understand market leadership, I brought in a perfect guest. We've got Brett Eversole with me. He is of Stansberry Research. As you can see, we've got the matching outfits on, the work uniform. Brett's the editor of True Wealth. He knows how to read the markets for what's coming next, and he's got a few ideas for what the market is telling him. So, Brett, let me step back for a minute. There's a phrase we use in the business, and we say, who are the market leaders? What's the market leadership? What does that mean, and why do you want to track it?
Well, sure. Well, thanks for having me, Matt. It's always fun to come and chat with you. I thought you laid out this story perfectly at the top, but, market leadership is really, people are just talking about, the stocks or the group of stocks that are going up and that are outperforming the overall market. Now, you talked about concentration. I think it is important that we really only care about leadership if it is a group of stocks that can kind of move the needle for the overall stock market. We have a very concentrated market right now. I think the top 5 stocks make up around 30% of the S&P 500. So, if we get a handful of tiny regional banks or some small industrial stocks that start soaring, that might make for a fun news article, but it doesn't really matter to the overall market. So it's not really what I would consider market leadership. So we want to think about what characteristics are driving the big stocks that really matter to the overall market. That's leadership. And we care about this because, as you spoke about, it tells us a lot about the themes that investors care about. It shows us what's driving excitement in the market, what's driving earnings in the market. That's what folks care about, and that's why we want to think about market leadership.
Okay, and so you are a great student of market history. And so what does your study of these market leaders tell you when you dig in?
Yeah, it tells you that, like you said, the biggest stocks rarely stay that way. What we've seen throughout history is that market leaders have a really, really hard time maintaining their position at the top. This is just kind of a feature of American capitalism. There's always someone trying to come and eat your margin up and take your business away from you and do it better than you and make you obsolete. So, you look back through history, we've basically seen a different group of biggest stocks at every major market peak. So in 2000, it was companies like Microsoft, Oracle, Cisco, and Intel. Those are tech names during a tech bubble. In 2007, we were at the end of kind of an industrial boom. Biggest stocks were ExxonMobil, AT&T, GE, and Citigroup. Right now, we've got the Magnificent Seven, but like you said before that, it was the FANG stocks. This is always kind of a continually changing composition. Um, the thing that's hard to figure out is where the next group of market leaders are going to come from. And for me, I always just kind of focus on what I always focus on, and that's what trends are driving the market. Focus on the stocks that are going up. You never really want to get married to an idea. It's too easy when you've made a ton of money on, say, Apple or Tesla, to think that you're always going to keep making a ton of money on companies like Apple and Tesla. But as we've seen over the past, 6 to 12 months, even those biggest stocks can flounder and do terribly for a period of time. It's really easy for investors, I think, to dig in their heels when that happens and say, I've made so much money on Apple, I'm never going to sell it. But there are no such thing in a lot of ways as kind of these forever stocks. So I think you've got to stick with the trend and be willing to move on and kind of take what the market's giving you. And that's because these biggest stocks, they just historically, they never remain the biggest forever.
I like that. I think what you're talking about, Brett, trend following is a big part of your investment strategy.
Mm-hmm.
And kind of what you're saying is keep holding the stocks that go up, but you can't love them forever, right? You have to just treat them like, I don't know, like you're a sports owner and you can trade away your players. You got to be unemotional about it, right?
Yeah.
And the other thing that's interesting that is different about this market than those old leaders, Warren Buffett says the big companies, he likes companies that aren't going to suffer from what he calls the ABCs of company decline, and that's arrogance, bureaucracy, and complacency. And so if you think about IBM in the 80s, or if you think about, I don't know if Walmart was this case, but companies get big and they get successful and then they get weaker. But it's interesting that all these companies right now still really are on the cutting edge, and they're really pursuing AI quickly. And since it's such an expensive project, they're the ones who are able to pursue it. So they have sort of a bit of an insulation, a lot of concentration, but they're a little more insulated than the previous generations. But maybe I'm falling into the same mistake that we've made every decade. Okay, so the Magnificent Seven have been the leaders. They are splitting up now. Tell me more about what you see in this story.
Yeah, I think this really is. There's no other story happening than AI. It's kind of the only thing that matters to the markets right now. And so whether it's the Magnificent Seven or farther down, it's the stocks that are closely related to AI are doing really well, and everything else is having some difficulty. So, the chip stocks are doing fantastic. Obviously Nvidia, the big GPU maker, is absolutely dominating, but also Broadcom. I would say Broadcom is probably pushing out Tesla as the seventh in the Magnificent Seven. Even AMD is having a great year this year. Mm-hmm. Also, anything related to the generative aspect, the data center builds and the infrastructure, talking about like Meta and Microsoft, is performing really, really well. Another thing that's interesting that I think people haven't quite woken up to yet is that a lot of like the old guard tech names, some of the like IT type names, are joining in this trend because this massive amount of new tech spend is creating a lot of IT demand. So IBM broke out to a new all-time high late last year and has absolutely soared this year. That's its first high in over a decade. Cisco, the darling of the dot-com boom, is pushing towards its first all-time high since 2000. And Oracle is another company that's absolutely soared over the last couple of years because they've built out one of the largest kind of AI cloud networks, and investors have flocked to the stock. So a lot of these kind of older tech names that people had forgotten about are now performing really, really well as kind of the second leg of this AI spending boom gets going. And so I think the spread in the Magnificent Seven and in most of the market is really kind of who's winning at AI and who's not. That's what investors care about right now. And until that changes, that's all that's going to matter for stock prices.
Yeah, I think Larry Ellison now he's the second richest man in the world after being a billionaire for a very long time. He's got a new ranking there because Oracle kind of came out of nowhere. It's very surprising that they've been able to keep up on this. But so the story is that the AI fever is spreading out of the Magnificent Seven, pulling up these other AI-related names. But if you had to look at what the next leaders would be outside AI, like what other trends have you identified that could become the next batch of market leaders?
Well, I'll say that this is a contrarian idea. So this is not a sure thing yet, but I think there's a big opportunity right now in the healthcare sector. So healthcare is a group of stocks that have just done terribly for years. It's the only sector that's down this year. And healthcare overall has been dead money for the last 4 years. And you think about that, that was a pretty darn good time for investors over the last 4 years. Now, I think the most interesting part of healthcare, or within the healthcare sector, is biotech stocks. So biotech stocks, they essentially peaked back in 2015. We're a little bit higher than that level, but we've essentially had dead money in an entire group for about 10 years. Now, what's interesting to me about healthcare and biotech is these are two areas where we thought early on that the promises of AI would lead to massive discovery. Back in 2023, right after ChatGPT launched, we heard tons of stories about how AI was going to lead to faster drug discovery. We're going to get new products to market and solve all these, health problems. And that just really hasn't materialized yet, at least not in the stock prices. I think as AI moves forward, we are going to get to that point at some point. And I think biotech is the group of stocks that could become a major beneficiary of that. Again, we're not quite there yet. But biotech has this history of going through these massive lost decades. This was a booming sector during the dot-com boom, but it peaked in 2000 and it was down by about 30% as late as 2011. But then biotech stocks got hot again, and the sector was up 4x over the next 4 years. So we've seen biotech stocks begin to move up off that April low we saw for the overall market. And I think if we see a break above last year's high, that is the kind of breakout that could push this sector off to the races. We start to get some of those drug discoveries and some of those exciting AI news-related things. We could start the next biotech, really like biotech cycle type boom. And when those happen, you can see 300, 400, 500% gains in relatively short periods. So I would say we're not there yet, and there's no guarantee that we do get there. But I think biotech is a sector to watch. And if that breakout happens, it's a risky place, but it's a place where you can make a lot of money over the next few years. And we could see some of those stocks become market leaders if it takes off like I think it could.
Yeah, and Brett, we on staff we have a doctor and two scientists to help us understand those kind of investments, and they're so excited about the developments happening in biotech and bigger pharma too. There's so many cool things coming down the pike, and watching the stocks just lag sort of the science is really interesting. So thanks for the financial insight on that one. So folks, what do you think? Are you diversifying beyond the big tech names, or are you riding the AI wave with the current leaders? Drop a comment and let us know your strategy. And we've been covering market leaders for more than 25 years at Stansberry Research. You can stay up to date with free high-quality research on the best investment opportunities in the market. Get more from Brett and I. Sign up free at stansberrydigest.com right now. And if this breakdown helped you see the market differently, hit that like button and subscribe here on YouTube so you never miss our market insights. That's all for today. I'll be back next week.